We are already live, so we cannot talk more about the 500 X's and the 400 X's.
Damn it.
Let me see if everything is okay. I think, yeah, we are streaming. We are okay. Yeah, so do I need to do the introduction? I have to do it, right?
Yeah. Yeah. Well, this
So,
was your idea.
yeah, it was my idea. But because your community asked for, TTC asked for. So, good afternoon or good morning. I don't know. Where are you people watching? Let us know in the chat. I always like to map the audience. Is anyone from Australia? Because I know we were talking on off. It's quite late in Australia right now. So let's see.
Okay.
Let's go for Annie, tell us. What do you think is going to happen? Tell everyone. Everyone's want to know your opinion.
What I feel like this is going to be really boring. Like I feel like everybody kind of knows what's going to happen. And so when I was actually saying this to someone today, is that when there's such a huge expectation for FOMC, it's always a nothing burger and nothing happens.
Yeah.
It's when it's unexpected that it's exciting price action.
Yeah, probably nothing will happen. I agree with you.
Really? You think the same?
We need some Darth Vader candles, to liquidate both longs and shorts. We need that.
Yeah. Maybe in the when he has the press conference, maybe.
Yeah, during the speech. So we have a lot of people from the US, UK,
yeah,
Hong
because we're
Kong.
here so late.
It's not late. At least for us in Portugal, it's not late. It's still.
What time is it for you?
7 p.m.
Oh, yeah, that's okay. Here it's bedtime in 8 minutes for me.
So yeah, there's someone from Australia here.
Really?
Yeah.
Annie, don't FUD. I never FUD. What are you talking about?
There's no FUD here. We're talking about FOMC. How can you FUD FOMC? And do you think it's going to be 25 or 50?
25.
25.
What do you think?
25.
If it's 50, we're in trouble.
Yeah, 100%.
Yeah.
And Scott Besson said yesterday it will be 25.
Oh, did he?
Yeah, he did. I think the most important thing will be the dot plot. That's what I'm curious to see if we are going to get 3 rate cuts at least this year.
Yeah.
Let's see. Vietnam, Ireland. It's 2 a.m. in Hong Kong. So, what do you...
Oh, yeah. And Aussies are here at 4 a.m. Go the Aussies.
Yeah, but you need to smash the like button because we have 700 people watching and only 200 likes. Someone is saying dump after the cut. I don't think we're going to dump. Maybe some Darth Vader candles, but as Annie was saying, it's going to give what the market wants. Let's see. It's almost time, right?
But, but it's then. Don't we have more? Wait, what do we have tomorrow? Let me check We've got important things still.
Tomorrow, let me see if I can share.
We've got Bank of Japan on Friday. That's important as well.
Yeah.
And what is it?
Unemployment claims tomorrow.
And Bank of England as well tomorrow.
Yeah.
So the whole week is like, we got to be careful.
Yeah. And it will be a good week. I think it will be a good one. Then you want to see charts? The only chart you need to see right now, it's the Bitcoin one. It's still like this, boring. What do you think of this spike up right now?
What time frame are you on?
5. I'm on 15.
What do I think of it?
Yeah, this spike up right now.
I'd like to see it cross the 50 EMA.
I don't use EMAs. I don't have it here.
It's right where your wick is.
Okay. Let's see.
The follow-up candle's trying. It's not too bad.
I hope you go up. I would really appreciate that.
Why? I think everybody would appreciate that.
No, I think a lot of people is shorting FOMC.
A lot of who?
I don't know. Not on TTC or in my community, but I think a lot of people are expecting a dump.
Yeah. Well, there's not really high level short orders until like 117.5 to like 118. Okay. In between there, it's kind of free.
Someone is asking if I'm long. I'm long since 108. I shared this on TTC today. Yeah, 108. That's my long. No, I didn't open any longs today. Right.
I did.
You weren't supposed to say that. You need to be disciplined.
But I'm not going to say what, so therefore I'm not.
Yeah, but you need to be like, it's FOMC. Don't not trade on FOMC. And that was the message all week.
I'm the perfect case of like, do as I say, not as I do.
Yeah. I'm not going to say open longs today.
Yeah, but you did. I bet. I can tell by your smile.
Sometimes you got to do it, right?
Exactly. You got to take chances in life.
Yeah. Sometimes you got to gamble a little bit. We also have a DJ inside us. Almost 1,000 people watching and 400 likes. We should end the stream right now.
If you give us a like, I'll tell you what I longed.
Yeah. You need 1,000 likes. So anyway, I think I know some.
Look, now they're all admitting it in the chat that they longed as well. See? It only takes one person to admit it, and then everybody else is like, yeah, I'm a degen too, I confess.
Everyone is a degen, I think.
Well, that's why we're here, right?
Yeah. Let me see. Yeah, 500 likes, 1,000 people watching. They want to know what you longed. 1,000
is good. I don't know. Is 500 enough to give the answer?
No. At least 800 to give one.
To give one, okay.
To give one, 800.
What makes you think I longed more than one thing?
Because I know you. I know I longed more than one thing also, so.
There was a longed Link. Yeah, I was watching Link actually. Link was looking good before.
There was a few setups that you cannot ignore today.
Oh, I know. That's exactly what I said in Discord. It's like, I know the timing, but oh yeah, Link is looking good. I know the timing, but if the setup's
I'm not going to change now, but yeah. I want to see how Bitcoin goes.
Yeah. Well, everything looks the same.
Yeah. As I sometimes share with Danny, I'm irresponsible long on Bitcoin since 108. So I don't know if you can share your screen to show some charts. We can try that later because I'm hosting.
Yeah.
So.
Yeah. How do I share screen? I don't know.
This is Zoom. I don't think if you share, we are going to see it.
Oh, yeah. Okay.
Because I have to set up everything. So 2 minutes to go. Who's sweating? Let's know. Who is short on Bitcoin right now?
Oh, I have a short too.
So you're covered.
Yeah, well, I could get whipped out both ways, let's be honest. Like, that wouldn't be the first time that's happened to me on a FOMC.
Yeah. Let's move here and see. Not this, it's tomorrow. And yeah, 1 minute to go. So I want to know if someone is shorting. You can see, right? I think you can. Yeah.
See what?
The countdown here.
Oh, yeah.
XRP flying. That's something I like to read. XRP flying is let it go. Let it go.
So everything was looking good on the 4 hour today. Really was.
So I'm also on X trying because sometimes it takes more time to update. But I really want to see the dot plot. That's something that I would really like to see it. So let me check XRP because when you say XRP, I cannot think of anything else. 15 seconds. Let's see.
Chris says pump leading in is bearish, correct? Not always. It depends on the open interest at the time and the 15-minute candle prior.
I think it's out. The XRP candle is crazy. I'm not going to share now because I want to see Bitcoin first.
Yeah.
But yeah. Some Darth Vader candles.
Wow.
They paused it.
They paused it?
Yeah.
No.
Yeah, it's 425.
That's rigged.
This cannot be right. Let me check. Did they pause it? No, they cut it. 25. Okay, sorry. Yeah, they cut it. Yeah.
Okay.
The forecast was a cut. Sorry, I was seeing this wrong. No, we had a cut. They cut the rate. And there she goes.
Yeah.
There she goes. Sorry, my bad. I was seeing it. Yeah, XRP is really going up right now. Do you think this will sustain or will it be just... Because we didn't break any major support.
I love trading news events, but when it's the FOMC and you've got the press conference after, it's very difficult.
Let me just
look at that now, right back down.
Yeah. Because of the dot plot. That's something I really want to see. But XRP was going up. I saw that. Sorry. Let me just pull here. XRP was having a good performance. But usually XRP pumps, in the past, they usually anticipate dumps. Do you remember that? So, yeah, but XRP is performing better than Bitcoin. This is a sign.
Of what? Say the words.
I'll not say it. I cannot say it. People will get mad at me. You have a lot of Bitcoin maxis on the audience.
Since when do you care if people get mad?
You are here and there's more people here from... No, I'm not going to say it. I say it on X. I'm not going to say it here. I cannot say it here. But even you have XRP now. A lot.
Yeah, I've always had XRP though, because it's such a good tradable coin. But I've never like fundamentally cared about it. But it's so good to trade.
Let me just check the dot plot really quickly.
The Dixie's dropping.
That's good. Of course, if the rates are going lower, it needs to drop.
But nothing else is moving that much.
They are waiting for a Powell, probably.
Mm.
Let me just check the dot plot because I really want to see how many more cuts we are going to...
Gold has got a big whipsaw wick.
Which one?
Gold.
Gold down?
The wick was down. Now it's moving up.
Okay. We need to... The gold investors need to look at the digital gold. They are still resisting the digital gold, Bitcoin. That's what I feel.
I thought you were talking about PAX G.
No. I'm really talking about Bitcoin because everyone says Bitcoin is the digital gold.
Yeah.
But the investor still doesn't see it that way. So
yeah.
It's just to, if in case there's some maxi in the audience.
Mm-hmm.
So
Roberto
it's
says,
dovish. The dot plot is dovish. So probably are listening to my daughter right now, trying to storm the studio.
Yeah.
So yeah, the dot plot is dovish. I think so. Yeah. That's good. Now let's see what he says. I know that's something data driven. He needs to say data driven. He's always saying that. So
yeah, Jose says when we have to wait for the conference, sometimes it turns the initial movement around. Exactly.
Yeah, but why? If the dot plot is saying there are going to be more rate cuts, that's what I think. If I'm not wrong here, why should the conference dump the market, right?
Who knows?
Yeah. It's hard to analyze the dot plot while live. It's not very easy. Let me just do a quick one. So, you need to talk now about the extended cycle.
No.
Yeah. We need to.
I can't. I'm very tired. I don't want an extended cycle. I'm ready. I'm ready to cash out.
Let me see.
I think people who want an extended cycle haven't made enough money from their altcoins yet.
But I want an extended cycle.
I know you do.
Yeah, that plot is saying about two or three more cuts this year. So
yeah, but we could go into a bear market and then start a new cycle.
Or a short bear market that will go to an extended cycle.
I'm down for a short bear market. I'm down for that. I'll agree to that negotiation. But I'm too tired for this cycle to continue.
Like a 3-month pause that we can rest.
Yeah.
And then let's go. I think they want an extended cycle. Let me just check the chat.
No, they're all agreeing with me. Look at the chat. They say they're tired as well.
Yeah, but that's because they have a lot of respect for your opinion. Because today I said you need to tag Annie so that you can come live for FOMC, and only two person tagged you on Discord. They
know better. Don't you worry. They know better.
Yeah. Yeah, extended cycle. I'm seeing. Someone is saying that you are already having an extended cycle. I don't agree with that.
No, it's not already.
Yeah. We had this discussion a few days ago, right?
Yeah, it's not already. We're still like on track.
Yeah, we are on track.
Yeah.
Yeah, someone, Trump super cycle. I don't like to use the word super cycle.
What's the difference between super cycle and extended cycle?
I think super cycle is that everyone is expecting, I don't know, maybe XRP $1,000, which I don't believe. Oh. Okay. Let's say like that. Let's just be clear. I'm really bullish on XRP, but I don't see $1,000 XRP or $500 XRP this cycle, let's say it. But yeah, I think that's what people are expecting. Like, I don't know, Ethereum to 20K or $1 million Bitcoin, something like that. So yeah, if you believe on $1,000.
Banana zone.
Sorry?
$10 XRP.
$10? I'm all in. $10, $15, even $30. Okay. I'm convinced. Now $1,000. I want to be wrong on this. I don't think I am.
Of course.
Did they end it quantitative tightening? No. Cutting rates is not the same of ending the quantitative tightening. Now the money will get cheaper. When they start quantitative easing, your money will have less value. Right? Yeah, that's how you say it. That's the difference. Extended cycle, and everyone is manifesting an extended cycle. You don't.
Well, I'm just gonna shut the channel down.
More important.
I say that all the time. I'm gonna delete the Discord.
But if you don't get an extended cycle, when do you think we end? The end of this year?
Yeah.
Okay. Bear market on 2026.
Yeah.
With Powell leaving the Fed on May of 2026.
I think. Yeah. Look, I had 3 phases to sell, right? One has already happened, which I did start taking profits then. The second we're in now, which is over a 3-month period. And the third one is Jan, Feb next year. So I'm happy to stretch it out till then.
But do you think Powell leaving in May will lead to a bear market?
I don't know.
If Trump going to nominate someone that will lower even more the rates?
Well, who knows? Who knows? What do you think? You think it's going to leaving will pump the market?
I think if he gets the majority on the Fed, he'll get the rates to where he wants. So yeah, that's what
before he leaves.
Yeah, if he can fire Liza Cook, I think it's how she's called. I'm not sure, and nominate another one for the Fed, he's going to have the majority, and Powell cannot do anything. So let's see. I want an extended cycle, because I think if we get to an extended cycle, we are going to make much more money than that we are going to do with a regular one.
Well, Not really, because we could cash out, we could have a short bear market, buy back in with double the money or whatever X you've done so far, right? And then we make more.
But we might not get these prices again.
Well, I mean, come on. A lot of alts are like at pretty bad prices still.
Yeah, we are talking about altcoins, not meme coins.
Yeah.
But even if, I don't know, maybe not going to get XRP at $3 again? Maybe? Or...
Oh, like, as in it won't go back to $3?
Yeah. If it goes to, I don't know, let's say $15. Although I have a target higher, $15. I don't know if it's going back to $3 again.
You have a target higher than $15.
I'll not say it here, but I told you.
In what year?
This cycle.
This cycle?
Yeah, for XRP, I have an higher target.
Wow. Well,
but
I'm on Annie's team. Normal cycle, please. I want to cash out, short it, then chill. There you go.
Sometimes what we want, it's not the best thing.
David says XRP always goes to 40 cents. That's true.
I'm willing to take a bet on that. So I'm not an XRP maxi.
Everybody wants a bear market first so they can load up. But you know what? If that were to happen, you better not leave, because if it were to happen and then you start feeling pain and then you leave, and then that's actually the best time to get involved, and then you come back when we're back in a bull market again. Like, if you're wishing for a bear market, you better stick around when it comes.
Yeah, but also one thing, we need to understand that the market is going more mature, okay? So the volatility that we are used to is going to decrease for the upside and for the downside. Okay, so that's why I'm telling you, we might not see at 40 cents. I don't see XRP again. Period. Okay.
Yeah.
That's okay, but that's why I'm saying we might not see again at $3. Okay, because if the volatility will decrease also in the bear market. Maybe I'm not going to drop 90%, 80%, maybe 30 to 40%. That's why I'm saying that. Okay.
Yeah, that makes sense.
And see the Darth Vader wicks that I've told you? Here they are. Yeah, there everyone is waiting for Powell. But that's why I was saying this, okay? It's not because I think XRP is a new Bitcoin. I don't think that. But it's more because of the volatility decreasing. It's like ADA. If ADA goes to $5, I don't see it going lower. Lower again to 80 cents, for example.
Dan said gold spot has just hit a new all-time high, 37.07.
Yeah, and Bitcoin is going down again. Let me check if everything is happening here.
Yeah, but now the S&P is moving up, so is NASDAQ.
Let me just say one thing.
It's front ran.
There's people saying that they are commenting and it's not showing. We didn't delete any comments. You didn't, right?
No, we don't do that.
Yeah, we don't do that, so it's not from our side. Just to clarify that, because some people were saying on X, look at these candles. We're saying on X that we deleted the
we do have very strict we have very strict restrictions on our, like, not when live, but when you comment on our normal videos, we have very strict restrictions for like bad words. So their comment is probably there, but it hasn't been approved.
Yeah, but this was the live chat. It's the same person that said that in the morning.
Live chat should happen.
That's something with YouTube, not not from us. Someone is asking where is our dip. Careful with what you ask. Be careful with what you ask. So let me check more. Bear market is very much welcome since I've learned so much from TTC. See, they are on your side. They want a bear market.
Yeah, but
let me take this here.
As a trader, it doesn't matter.
Yeah.
Bear market, bull market, it doesn't matter. There's no time limit.
That's 100% true. See, it's dropping hard now.
Mm-hmm.
Let's see. Someone was asking for a dip. There you go. So
What if people just realized for that to happen? Because we're inverse now with the S&P.
I don't know, baby. The only thing that I'm seeing right now is that 9 of the 19 officials see 2 additional cuts, like I was saying. And yeah, 2 see 1 cut and 6 see no more reductions. Maybe it was this information. I don't know. You are the market maker expert. So
Oh, well, if we could show my charts, I'd show you how we just tapped into 114, 860 liquidity. Just tapped on it right then.
yeah, I don't know. You can try to share it and I'll try to add it here. See if you can.
Well, I've got to find them.
Let's
Hang
see.
on.
We have 1,200 people watching and 700. And no, we
Does
didn't.
that work?
Sorry?
Does that work?
Let me check. I think I need to do something here. Give me a second. You are sharing now, right? So let me try to do some magic here to see if I can. You might see something around now here in the screen. And let me see. Because your chart is, I'm seeing it here. Let me see.
Yeah.
If I do this. And now I change it here. No, I don't think so. No.
But you have the Chrome extension anyway, don't you?
Maybe. But let me see. This one, right?
Wait, what do you... Yeah. So if you go to the... Oh my gosh, my old eyes can't see. Hang on.
You can zoom in.
The second one. The liquidation levels one.
Okay.
And then, yeah, just go down and press that blue button.
It should show, right?
Yeah, why didn't it show?
It's my internet. It's broken. It's true.
Try it again. Did it log you out? It might have logged you out.
Yeah, it
logged
me
you
out.
out.
Let me just do the login in another window and see if I can do it. So they don't have access to my login.
Well, anyway, you can trust me. Which is still
Of course. But if I may not share my passwords,
yeah,
it will be awesome. Yeah. So, condition levels. There you go.
Yeah, see there?
You seeing this?
That's what it just took.
Yeah. Let me just pull here so they can see it better. So now we go max long, 500x.
See, this is why I didn't want to stream. How do I stream and open a trade?
That's why Annie's not sharing her screen. It's because she's opening trades right now. And I'm stuck. I cannot make money now because I'm sharing my screen. So let me go here and check the comments. We need more. No. You can say now one altcoin that you long today. We have 800 likes.
Wait, let me check if I got stopped out first. No, I don't think I did because it was a high time frame trade. So it shouldn't get affected. Let me check. Yeah, no, I'm fine. I long Doge.
Doge.
Mm-hmm.
Doge is going to have the ETF tomorrow.
Oh, well, then that was a good decision of mine.
Yeah, Doge is they're going to launch the ETF tomorrow. I think they were waiting for the FOMC. Because they delayed last week. The XRPR one.
Really?
Yeah. Let's see. Where are my big red candles?
Why do you want red candles?
I told you, some people were short.
You want to open more positions.
HBAR ETF is coming too. HBAR, AVAX. When Doge is going to get an ETF, you can expect everything to go crazy. Pengu to the moon. I think we should definitely do a 500x long. I cannot do it.
What?
I'm joking, okay?
We're 500 on What exchange can you do 500? BTCC. I think
BTCC?
is the only one.
Yeah.
I think that's the only one. Weeks is 400, right?
Maybe if you ask, they can then a few more 100x and go to 500. You want me to check H bar? I can check H bar, no problem. My precious. Another Darth Vader week. Look at H bar. It had this week here. This is the 15th.
Wow.
Yeah. It has this crazy week here. Does your liquidation levels work on H bar?
Yeah. Should.
See. This is free for everyone that is on TTC. Right?
Yeah. In the membership.
In the membership, yeah. H bar. Leave H bar at around these levels that I'm okay. I can wait for an extended cycle for H bar. I'm okay with that. We only see weeks. I didn't got this one. So yeah, 10 minutes for the speech. And Bitcoin's still here.
Yeah, it's waiting. What do you think he's going to talk about?
Data. The usual. Data driven. If you want to get drunk, I don't drink alcohol. But if you want, just take a shot every time he says data. At the end of the speech, you'll be drunk. 100%.
We have a joke in the Discord because he always clears his throat. Have you ever noticed that?
No.
Oh my gosh, it's so annoying. He'll say a sentence and they'll be like, and then he does it again.
See, another shot.
We just count them.
That's another shot.
Yeah, that's another shot for sure.
Let me see. Dual mandate, yeah. But now unemployment is going lower, so let me see.
Raminda says, why is that suitcase behind Annie for? Because I'm waiting for the bull market to be over so I can pack it and go away. That's why I don't want an extended cycle.
I would believe in you if I didn't saw the size of the suit of that suitcase there. It's too small.
That's the carry-on suitcase.
I bet you take 2 carry-ons, not only one. You can say it.
Well, does a handbag count as 2 or 1?
Then 3.
No, then it's 2.
How's Link? I think you saw Link, right? Link was holding on well.
Yeah, Link was looking... Oh, it was looking the worst out of everything, which is the best opportunity out of everything. How does it look now?
Yeah.
Yeah, fine.
But needs to recover. But Link is going to have the event soon. I think so. So it's going to go up. It always... I'm not sure. I need to check that. When is the Link event in New York? But yeah, it will start to go up 30 days before, and usually dumps the day before the event starts. So just pay attention to that. They want me to move you to the top right of the screen. Why? It's easy for me to move the chart. I think I had an entry here. I missed the entry. Yeah.
For what? For this, the Bitcoin?
Yeah. I was already long, but I said if I wanted to long, I would long here. Yeah, I missed it. That's okay. I was already long, so I'm okay with that. I still want 120k. If you can get today and dump after, I don't care.
You want 120 is your target for long?
Yeah. For taking profits. Partial
the
profits.
5 minute looks good. Do you ever trade on the 5 minute?
On Bitcoin?
Yeah.
I don't have, no. I'm still long from 108, so I'm still long here. But I'll be longing.
Someone's asking about curve.
Everyone is afraid of curve right now. Who is asking about curve? Let me see.
Plummen. And also Sol, but Sol's not worth looking at when it's at resistance.
Where is? I don't see anyone. CRV. You need to understand. I said this before and I said yesterday. Look, I don't need to convince you about anything, but CRV also run harder than the other ones. So it's the same. My bot on CRV needs CPR. Okay, AVAX. We look at all of those today. So, but let's see.
Let's see if this 5 minute on Bitcoin does a V bottom. It looks like it's trying to.
I'm not going to add to my long because that will be more irresponsible.
You already have. When either of us look down to our desk, you know what's going on.
You are giving all the secrets. I cannot stream anymore.
I may have looked down to my desk already about 5 times.
The other day, I literally told people to wait because I was opening a long on my phone on one of my live streams. If anyone from Portugal is here, they can say, look, just give me 2 minutes. I'm going to open a long. I think it was Link. It was Link.
So funny.
So
giving away all the secrets here.
No. Yeah, it was on Link. It was on Link. There's someone here from Portugal saying that. But I think it's better to be honest. Look, I'm going to open a long. So just give me 1 minute. So
yeah.
And
but now the S&P and NASDAQ are coming down. Yeah. See? Crypto front run.
Let's see what he's going to say. Only the pros can look down to their desk. Yeah, I still need to find a way of opening longs and my eyes stay static. So I'm just trying to see when it's going to start the speech, the afternoon. Let me just put here on the Fed because I think we don't have a transmission link yet on YouTube.
No. Where do you normally watch it? What channel?
YouTube.
That's the platform. I meant what channel?
It's this one from the Fed.
I'm not. Are you sharing your screen?
I will now. It's here already. Unless you want to this elevator music. That I don't. That I don't want to listen to this elevator music, so I will stop here because I have it here on another one, so you can check the chart. It kind of sounds like an elevator.
Yeah.
I think we are going to reverse, Annie. What do you think?
Yes.
Yeah. So.
I think so.
I'll try not to look more down. You couldn't listen, but my alert started to tingle, you know? Tick, 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 tick. So, it's what it is. Well, let me see more comments. You already gave so much. What's your price target on Tesla? I'm not going to tell you because it's a long-term hold. Okay? I think Tesla can do really well. I don't have I will read all my targets. I assess them. Okay. Right now, I'm buying conviction what Elon Musk will do, and also because I don't see Tesla as a car company. So the XY recovered. Let me check. Yeah, but the XY died today. I think the XY. I'm seeing the 5-minute chart. Don't tell me it recovered because I can show it. Still have time, right? It's going to start. But look at this candle on the XY. This is awful. I think unless it recovers everything, which I don't think it will. Yeah. This is a problem for us Europeans that receive everything in or trade in USDT. When we
I
are,
know.
it's a real problem.
Yeah, I was thinking about that today.
Like it's you need to get the euro to have more adoption. It's starting.
Because even here, the dirham is pegged to the US dollar, so even here it's not good.
You are taking a hit too.
Yeah.
Employment and stable
That's so
prices
funny.
for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived. a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
That's the best part.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Well, great. And then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually,
Look at
the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address.
Not going long now.
How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller.
You can still listen, right?
The labor market has softened. So the
You can
case
still
for
listen.
there being a persistent
Yeah.
inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is
Trying to
quite an
bounce off the
unusual
low of
situation.
yesterday.
How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long
I
is it
bet everyone
expected
is
to get
looking
to
down
the
now.
goal. So, and then we
Huh?
think
Yeah,
about those things
for
and we
sure.
see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs
If you don't
market
understand,
for
not know
households
what
at
to
home,
do, don't
especially
do
younger
anything.
Americans struggling to land a
Yeah.
job?
So
Exactly.
it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a
Toshi still will
healthier
keep dumping throughout the
economy,
weekend.
healthier
So
labor
this
market, there
candle
would be
right
jobs
now
for
is
those people.
on
But now the
the low
hiring
of the
rate is
day.
very, very low. So
This is where you need
that's
to be
been a
looking for
growing
the
concern over
structure
the
to change.
last few months. And it's one
If
of
it
the reasons why
changes,
we think it's
we'll go up.
appropriate that we begin to shift
need
our
more
policy
candles.
focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time, And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what, let me say a word about the
All we
SEP
know is that
really
data.
here. So we often point this out.
Okay.
The
No
what
one
the
is going
SEP
to get to drink to the-
it's an accumulation, accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's
not
natural.
sure.
I think it would
Okay.
actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico.
Even the data today, you only
You've
said
talked
once.
a lot about Fed independence and the
It's not the
importance of it
simple-
over the years. But as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that
Better be careful
that is
here.
not
Okay,
at
do not
all
go
the way
long.
we think about things at the
Think
Fed.
so?
We're taking a longer
What do you think,
perspective.
Andy?
We're trying to
No, I agree.
serve the
I'm
American
waiting to
people
see
as
if
best
it
we can.
breaks. If it breaks,
So I think
I think we're going to
you would be able to
113
tell.
and a half.
I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having really a great discussion around these challenging issues. So
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
No, he was smart.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens
He seems
around
defeated.
new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that.
It's
You've
not
got
the
to have a
same
model
Powell.
that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior
stocks
month.
are pulling back
and you get
hard.
to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we
Stocks?
get it a little later.
S&P,
Yeah.
NASDAQ,
Well, for the benchmarks, if that
gold.
holds, it's
Holy
51%
shit,
of the
gold.
jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
He's defeated. He's not the same Powell.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point
The S&P
now
looks like
is going
crypto.
to arrest that?
Well,
What?
I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking
Jerome
in
is as tired as any.
expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minorities. Unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we
We
use
have a
our
1
tools.
minute time
And,
frame W formation.
It starts with a
1
25
minute.
basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just
I didn't
saying
saw it at
it's
all.
not just
Go,
one
go,
action.
go.
As a follow-up to that, the growth mix right now seems very
I don't drink
concentrated
alcohol.
in investment.
You don't need to when you look at the 1 minute.
Side, in higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment.
1,400 people. We need at
I
least
don't know how long that will
1,400
go on.
likes.
No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations,
So
and that may
Nancy
well
is
be
drunk.
skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
There
Hi,
is-
Stephanie Rule, MSNBC.
I think he's done. I don't think he's
Treasury
going to
Secretary
stay.
Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Gold took a big hit.
Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess and widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college, and yeah, there may be something there. It may be that companies or other institutions that have been hiring
We are going
younger
to be
people right out
replaced
of
by
college
AI.
are able to use AI better,
Not
more
possible.
than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Powell is cooked. It's over.
Yeah, it's over.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category.
No volume. Went
And,
down to the 15
last year,
seconds. Much better.
Goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation
Look
went
at those-
very high, but we had essentially
eyes, they tell
returned to
everything.
zero or
Yeah.
slightly negative inflation.
feel his pain.
Now, I
Yeah.
think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%.
My 1 minute
So
W is
it's-
working
it's
so far.
contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by
If you're not trading on
really the
1 minute, do you even
companies
trade?
that sit
I
between the
know.
exporter and
Come
the
on.
consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been been pretty small. It's been slower and smaller than we thought. But the evidence is, it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in
There we
May.
go.
I have nothing new on that for you today.
He doesn't have to say it. You just need to look at him.
Hi, Katarina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating
Rick
basis.
Begos,
So
can that
no
lady
one
say
voter,
some more?
can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding
That's
of the
one of the
economy. That's
troublemakers,
really all that matters.
usually.
Yeah.
And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the
I
economy.
need to see his face.
Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
So are we bullish already? Depends what time frame you're trading.
Financial Times.
By 1
Given the
minute, is
range
at the
of views
target
expressed
already.
prior to the
1
meeting, I
minute
think
is
there was
bullish.
a lot less dissent
See?
today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very
500
strong
X year,
consensus in
you'll
the
be in
meeting.
profit already.
Also, on the flip side, to just explain why the dot plots are really
Wait,
so
look, you think I
scattered
didn't
between
take it?
someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side,
Always
why there
bullish.
was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things.
No more
I think that
responsible
the
videos
new
after
data
this,
that
and
we've
we're
had,
like,
it's not just payrolls,
secrets out.
other things as well,
Till
suggests
the end of the
that
cycle,
there really
just
is
degen.
meaningful downside risk.
Yeah.
I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone
Hey,
wrote down, supported this
Can you
cut.
see on your end
And,
what the link of
some
this live
supported more
stream
cuts
is?
and some didn't, as you will see from
The
the dot
link?
plot. So that's just the way it is. I mean,
like
people
the
have
YouTube URL. Can
it's,
you see it on your end?
you have
But
people
from
who take this work
the-
very
our live stream
seriously,
or
think about
Powell?
it all the time, do their work, discuss
Our
it with our
live stream.
colleagues.
Yeah, I
You
have
know,
the
we
link here.
endlessly discuss this in
Can you see what the
between
last?
ourselves, and then we have a meeting where we
letters
put it
say?
all out on the table, and this is what you get. And
Any.
you're right. There's a range of views in the dots.
Yeah,
and-
it says
and I
any.
think that's, like I
any.
said, very unsurprising given
Let me just
in
show
the
you.
dots,
Yeah,
quite
it said-
unusual, historically unusual nature of the challenges that we face. But
It's here.
let's remember though, the unemployment
Says
rate is
any
4.3%. The economy is growing at 1.5%.
So this is bullish,
So,
right? We are going to 120.
It's not a bad economy or anything
duh.
like that.
Should've
We've seen
taken
much
that
more
1 minute
challenging
W.
economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are,
Are we
as I
long
mentioned
or
earlier,
what?
there are no risk-free paths now.
Q stands for queen.
It's not
I like
incredibly
that.
obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see
Yeah, they
that
did
there's
spell it
just
wrong.
a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You
need to
could
break
say
this
it's somewhere
resistance.
between 0 and 50,000, and you'd be right or wrong. I mean, there are just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly, and that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but
It looks like a meme coin.
I think this level of this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PC numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the
Should we
AI
wait for
build-out
Asia
and business investment.
I
So
think so.
I
think
we watch all
when
of it.
he finishes,
and I would say we
there's a high
did
low,
move up.
you'll
the
be
the
safe.
median for
And that
growth
could be
for
in
this
any
year actually
session.
moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population.
funny.
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply, and so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot for big changes in rates to matter a lot for the housing sector.
Let me just show you
And
something.
the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out.
Look at what Trump said.
So that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Said no one ever.
Forecasting is very difficult even in placid times. And as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now,
if you're
is a
running the
particularly
Fed, we'd be
challenging time,
cutting rates
even more
faster.
uncertain than usual.
Then
And
Sleepy
so I don't know
Joe can
any
eat ice
forecaster
cream.
Anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Oh, Jesus, that's too funny.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the
I
balance
love
sheet,
the tweets from Trump.
we're still in an abundant reserves condition, and we've said that we would stop somewhat above somewhat above an ample reserves level. That's what we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices, so that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, And that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And,
This is the most
I would say
entertaining live stream tonight.
It's a mixed
You know
picture,
what?
but
Next
households
time,
are in good shape.
We're going to have
Banks
to
are in
work
good
out how to
shape.
share my
Overall,
screen because we're
households
going
are
to
still
degen 1 minute
in good
trades.
shape.
Yeah, we
in the
can
aggregate.
work
And I
that
know
out for
people
sure.
at the lower end of the income spectrum are under pressure, obviously. But from a financial stability
Most
perspective, we
entertaining live
monitor
stream.
that picture.
But
We don't
only
have
on,
a
like,
view that there's a
small money.
right or wrong level
That
of
has to be
asset prices
promised.
for any particular
What is
financial asset.
small money?
But we
Nobody's
monitor the
allowed to
whole-
blow their
the whole
accounts if they
picture,
follow.
really looking for structural vulnerabilities. And I would say those are not elevated right now.
You're supposed to say, Annie, no, don't do that.
200x? No, only 500x.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit
It's always the same
is putting
question.
pressure on inflation expectations?
Yeah.
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over
Trump
time.
deleted
So
the post.
we don't take that for granted.
but I still have
we
it.
actually
What?
assume that
Did he?
our actions have a real effect on that, and that we need to
Do you have Truth Social? Because I don't.
continually show
let me
and
check, I
also
do.
discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. I don't. Your latter part of your question
Yeah, I
was
think you
about
did.
Really?
independence. I don't
Well,
see
the last post
market participants.
was 16
I don't
hours
see
ago.
if that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
It ended.
Oh.
And now we need DXY to dump and Bitcoin to go up. So
Yeah.
so we can Gucci. So I think everyone enjoyed the stream, right?
The likes will tell us.
Yeah. I think so, but I think so. I do believe.
Him deleting the post is the most bullish thing.
Yeah. Yep. Yeah, let's see how the market will react now. Any advice? Any?
I think
Long and
I
pray?
think I think we're gonna have a V-shaped recovery is what I think is gonna happen, which means if we consolidate now, like into the end of US and maybe into Asia, then it could be safe to go long again, but only if we consolidate from here.
In other words, do not sleep tonight. So like
Well,
this.
I can because I got my position. Don't know about the rest of you.
And it was yeah. We had to open some longs, right? They were too juicy.
People don't know. Like my career started as a 1 minute time frame degen scalper. Like when there's volatility, there's something happens in my heart. Like, I just
Like-
eat it up. I love it.
It's like I need it. I need it. Yeah. Yeah, I understand it. So
I would love to live trade like that, but people would follow and it's very, it's very hectic.
yeah, but if they fall, they need to take the risk. I don't agree with that. You know, I think. Oh, look, the alert that I just put on XPA,
Yeah, what was that?
it was the S&P. Did you saw where I placed the alert?
No.
It was right here.
Ah.
Yeah.
Well, there you go. It'll follow soon.
It recovered fully. It looks like a meme coin, but it says the S&P 500.
Yeah.
Because it does look like a meme coin.
It does. It's crazy. That was everything was crazy volatility.
Yeah,
Gold even.
when we have
But you know, the Bitcoin on the 1 hour was a perfect retest of the 200 EMA. So I think it might be okay.
I think I was going to say to go to the 1 second chart, but you said 1 hour.
I said 1 hour.
1 hour. So.
Yeah. So that's what I would do anyway. If we consolidate, I think we're okay.
Look at Bitcoin going right now. My coin still not move.
What's the coin?
What? Yeah, what? What coin is not moving right now?
Captain Happy said, did you read it? Where can I cash out the demo trading dollars? I'm glad I stayed up for this.
Yeah. You should all thank Annie because this is already past your bedtime, right?
Very. It's 11:26. Oh my goodness.
This is a big drama.
Big drama. It is. All right. I think it's time to go get some trades.
100%. So we need to wrap it up. And thank you for being here.
Yeah,
Leave
thank you.
your like and also leave the comment at the end because the bots are going bananas for sure with this live stream.
Oh yeah. The boss would have done great.
So see you all. You are going to live stream or video tomorrow?
Tomorrow depends what time I wake up. I'll do something.
There will be something. Let's say like this. Yes, thank you for being here and see you all tomorrow.
Bye.